We've heard from the previous session really a big focus on what still needs to be done in terms of improving the investment climate landscape and operational environment in Europe. And we're going to hear now your thoughts on that, both from government official institutions in your respective countries. So we're talking about Greece, we're talking about Cyprus, we're talking about Ukraine, and also from the point of view of your specific business sectors. So I want to give you all the opportunity to make some opening remarks. Sure. And I guess one of the questions which the previous session started with is, how are geopolitics and indeed war and global economic uncertainty affecting the investment climate for your country or your sector or your company, and how you navigating those problems and mitigating those risks? That's a kind of general question. I have very specific questions for all of you, but let's start with the general and we'll go to the specific.
Thanks. Well, thanks a lot, John, and the organizers for inviting, but especially for convening such a session, which is, very, very relevant in today's environment. I think the first point to make is that really we should stop thinking of the current climate as a crisis. I do not believe that this is a crisis. I think we're going through a transformation. And we should look at it this way. Value chains are being realigned. New divides are being created. New alliances are being created. So really, each and every country, each and every region, if we're talking about Europe in general, needs to look at this in terms of the changing landscape and what we need to do to be successful as this transition happens. If you are a country in the Middle East currently, being caught in a war that you didn't start and paying a very hefty economic price, of course you have to look into your value chains, especially the ones that are critical to your defense or security, and start thinking about where they're coming from, if you can depend on them in the time of crisis, and whether you need to change them. Those are not economic considerations. In normal times, the economy shifts in order to maximize profit, but now it's all about trust. It's all about ensuring that the lights will be on in all different kinds of circumstances. And of course, Ukraine sees that as a day-to-day part of its war effort. We feel the same thing since we are at the edge of two circles, the Middle East one with its instability, and of course the Ukraine side, and I think Greece is right at the edge of both of them, and that creates unique challenges, but also strong opportunities as well. I think Greece has, we are sitting in this very, very difficult region with specific advantages. Number one is we have gone through a very difficult financial crisis. I mean, you've been here with us for 30 years. You've seen the ups and downs of Greek economy and Greek politics. So you know exactly what I'm talking about. But this financial crisis has brought a lot of reforms. Mr. Mylonas mentioned that countries in crisis tend to do more complete and more successful reform programs. Certainly, Greece is one of the most successful ones, I think, in the history of IMF's interventions, etc. So we are at a time where we are strong financially, fiscally, and so on and so forth. The second is that we have a very much pro-business government, a government that aims to attract investment and aims to help foreign direct investment. The numbers show it. We used to have less than 1 billion year after year of FDI. we're over
Or
11,
even negative.
yeah, well,
elsewhere.
in some years, yes. But now we're over 11 billion. We're going from strength to strength, from record year to record year. And this is a reflection of the fact that the international investment capital is recognizing that we are a pro-investment economy. And the final thing is, of course, that we are, I think, in a sweet spot in terms of the distance from the crisis points, but also the proximity as well, in the sense that we provide stability, we provide geo-economic advantage with our entry point through Europe, all those corridors or networks of corridors from Asia, from India, the so-called IMEC, and so on and so forth, the 3Cs initiative. Greece plays a bridging role, both in terms of geography, but interestingly, also in terms of culture. I think what increasingly people find is that they come to Greece from the Middle East and they feel like home. They come from Ukraine, they still feel like home. So it's a very open environment, it's a very friendly environment, and very much conducive to business. So we will continue this path. We will try to explore more ways to attract more investment capital, but we will also be wary of the shifts that happen very quickly nowadays and can produce significant risks for us.
Thank you very much for that, Minister. So when you started, you talked about really a change in mindset, you know, not thinking in crisis terms, but transformation and how to deal with that. But of course, you're coming from a country that is cannot help but think of crisis. You're in the middle of a full-scale war and have been for a long time. So I mean, you're representing the State Property Fund and you've got specific tasks, but I wanted to ask you, you know, more generally, when, you know, you're operating in a country at war, you know, how are you even approaching this question of, you know, of investment, the investment landscape? You know, how is it possible to even attract foreign investors? You know, is anybody going to take the risk in a country where at war, where there isn't at the moment an end in sight? So your perspective, please.
Thank you. Thank you very much, and thank you for having me here. It's a privilege and a pleasure, really. We've been talking about competition of the European Union here for the 3 days of the region of Greece, and in a way, think of this war as of the most extreme and brutal form of competition. Because it is a competition. It is a competition in policies, it is a competition in resources, in management, in mobilization, in organization of the processes, but also in terms of the capital, in terms of the production, in terms of being able to outproduce one another, being able to dominate in technologies. So in a way, this is, you know, the continuance of the competitions that is already happening in different regions, and in the region that we consider ourselves to be in Europe, in the EU, however, on a very extreme level. Hence, what I'm trying to say is that we are not trying to pretend war is not there. It's obvious for everyone. What we're trying to do is to say that, yes, it is a risk factor, but I want it to be the only risk factor for whoever might be interested in Ukraine. And Mr. Theoharis here said a very important and crucial thing. It's about trust. So in a way, I think that I'm more in a trust-building business than a selling business, you know. Because if I manage to convince anyone that, yes, Ukraine is in war, yes, Ukraine is in a very turbulent state, but that is the only thing you have to consider. And we have ways to de-risk this, to hedge this, to protect your investments in case of a force majeure. But apart from that, if anything else is fine, and we have trust between the potential investors and the government of Ukraine, which I represent, then I think that I'm doing my job quite well. So the thing is that Ukraine, in a way, is offering something in an endangered region, in an endangered time, yes, but at the same time, in a very unique way and at very unique conditions. For instance, here people in Greece know very well the city of Odessa. Odessa is the city where, in a way, Greek revolution started. Filiki Eteria was founded in Odessa, and the city, I think, is well known to the Greeks. There is a portside plant that used to produce the biggest amount of ammonia on the continent back in the Soviet times. As of today, I don't think I would say it still produces probably might produce one of the top 3 amounts of ammonia. Now, an asset like that in normal times, in normal regions, would cost you an incredible amount of money and probably will never be on sale because it is a strategic asset. But for us, because we consider the presence of foreign capital in Ukrainian strategic industries as a crucial part of our security guarantees, the situation is different. So we are looking for those who might want to have their skin in our game, but at the same time benefit from the opportunities that Ukraine offers in different sectors and industries that have a lot to do with rare earth materials like titaniums or like ilmenite, zirconium, titanium, alumina, fertilizers, and so on and so forth. But the fund is a peculiar place, so if you're not looking for something big, in our portfolio we manage also a small bakery in the west of Ukraine, a castle, and a kosher vodka production site. So we have everything on every scale. Thank you very much.
Well, thank you. I'm going to come back to you and pick up on some of those points. Yeah, I had the pleasure to be in Odessa last year, traveled there with a friend from Romania. We went to Moldova. I said, come on, let's cross the border and go to Odessa. And yeah, the Greek, the history of the Greek presence is still there. You walk down the streets and Greek street. And yeah. Okay, turning now to business perspective, Mr. Papakonstantinou. Ideal Holdings, a very important company listed on the Athens Stock Exchange and does invest in a similar manner to a private equity company. So I'm sure you're going to tell us more about the company, but yeah, just to ask a similar question really about how the operating environment in Greece has changed from your perspective in recent years, and how your operations have been affected by the fallout from all these external shocks, the global economic uncertainty, because in a way, Greece, in terms of the numbers, is bucking, the trend. It's going against the trend. It's attracting foreign direct investment. It's actually managing its public finances very well. So in many ways, it's an outlier. Is that how you feel it in your sector, in your business?
First of all, Joanne, good morning, and thank you. You answered the question yourself, I think. I would say the way we see things, because I will try to tackle the issue from both the private perspective and the Greek one, of course. So you see that everybody here, and you see from the governments as well, that they all compete in the investment arena to attract investments, which is important. I would say in a few words that the environment is dominated by volatility, which is something which, unfortunately, this is something we cannot forgo. You've seen the shifting trade patterns. We have tariffs, we don't have tariffs. We have 10% tariffs, 10% tariffs, whatever we have. Then you see that you have faster investment cycles. And you have this technological evolution that comes with AI and all the discussion around it. So basically, what you see, you have faster investment cycles. This is important. On the other side, you have to make sure and clarify that the capital always seeks for opportunities, which means that no matter what the geopolitical environment is, no matter what the situation, you have to invest and you have to make returns and reward your investors. That's how always it works. Greece is entering this discussion from a fundamentally from a strong position than it was 10 years ago, where it gained the investment grade, which was very important. We have a stable political environment, the economic, and I would say also The production has really evolved and upgraded, so we're in a much better position compared to other countries. However, what I would say is important is for Greece and generally the private and the public sector to attract what I would say long-term investors and not the opportunistic. Because always, you remember, in an investment cycle, the first cycle are the opportunistic investors, and then really comes the strategic one. So what makes sense for everyone is to attract, I would say, the long-term investors. Now, what I would say, and I will try to summarize, is that, as I said before, Greece has made a lot of structural changes. This is something you've said before, and it's a common sense. What makes sense now for Greece is to proceed to the next step and make sure that we create bigger and companies that can compete internationally. I think this is the real challenge, and this is what the government and the private sector should focus, in the sense that you should definitely boost M&As, make sure that you make bigger. I don't believe in what it says that, you know, the backbone of the economy should be the mid to small size businesses, because they are, but they cannot compete internationally. So what makes sense is to boost and give more, I would say, motivation to companies to merge and create a larger scale. This makes more sense. And this is where the investors will definitely step in and give and reward this effort, because this is the size matters, and this is what really investors are looking for. So I would say, to summarize and close my opening remarks, I would say that yes, we are in a much more difficult from geopolitical stance and environment. However, always investors and capital look for opportunities and rewards. I also believe that Greece is one of the countries, I guess Ukraine is the same, it's going to be, but definitely Greece is one of the countries that really attract FDI, as you said, will attract investors, and definitely will give these opportunities.
Thank you very much. Yeah, lots of food for thought there, which we'll come back to. Mr. Sifakis, yes. You're in the business of providing information about credit behavior with a view to encouraging responsible lending. And you will explain it better than me, but obviously your particular business really has been the transformations that have happened in terms of on the macroeconomic front, and particularly on the fiscal front, and in terms of what's happened with the public finances, has been absolutely critical for your industry. So maybe you can just give us your perspective about the changes of recent years and how that's affected your operation.
Hi, John. Thanks for inviting me, and also big thanks to the Economic Conference that actually put together this distinguished panel to discuss a major topic for modern economics. I guess that you're very right that we are in the information business, and if you'd expect me to start talking to you about financial data, Mr. Papakonstantinou is quite aware of this. It's an excellent professional in all the panel here in analyzing this, and the previous actual panel does it very well. I think if I start talking about credit scoring and how the business can improve their score so to be able to access financial markets, it won't be a great contribution or a significant contribution to this panel. What is important to discuss, and I think it's becoming an asset, a valuable asset for modern economics, is information, and especially reliable and accurate information. In an environment that is continually changing, and as very correctly it's been put as a volatile environment that we live in, and especially when geopolitical changes reshape the world, when and of course they're changing the economic priorities, and when we see that cyber crime becomes more sophisticated, plus that any change in the economy affects the markets in seconds, we realize that having stable and reliable financial information is vital in making decisions upon investment. Another very important issue that I think we have to address and notice is that the investment decision has changed. If in the past, fund managers and investors, they deciding upon financial data itself, that has changed completely. Now, the decision process is multitasking. Any financial manager or investor takes into consideration many more factors, like the operational resilience, the supply resilience, the ability of the company to be sustainable. The digital readiness are parts of the equation that is being actually analyzed before a decision is made. So it's become, I think, evidence that financial information and accurate information is vital for making decisions of this kind. So our role is changing, and it's changing that from being a credit bureau, we're becoming now an information institution that provides and should provide information to organizations and financial institutions that will help them to reshape their business future. So if I say that how the information that is being provided by credit bureaus can help and contribute to financial decision and safer investment is by being as much accurate as you can possibly be, in a sense that if we don't provide data that is accurate and complying with the changes that are made, decisions related to investment will be poor.
Thank you. Yeah, and of course, I mean, when you think back to the start of the Greek crisis, you know, that obviously was something at issue, you know, the transparency, you know, and reliability of information and statistics and so on. But we'll come back to some of these points. Yep. Thank you very much. So, John, a perspective from Cyprus, and you know, from you know, I suppose the whole tech AI revolution that is taking place in finance and fintech innovations in general. How is that affecting access to capital and the investment landscape, not only in Cyprus, but in Greece and the wider region? You know, and can you also say something about how you see the development of capital markets in Cyprus and Greece and their role in driving growth?
Thank you, John, for the invitation, and good morning, everyone. For the third day now, I'm listening to everyone, and I think in my mind, I came up to the same conclusion that I keep coming for the 18th consecutive year that I'm present at this conference. So we keep asking ourselves how we're going to attract more investments and what are the problems in Europe. And I have a feeling that we already know what the problems are, but we don't have the capacity or the willingness to solve them. So what we do is that, let's say, for example, in the financial sector, we are dependent pretty much from the United States, from correspondent banks or clearing houses that we need them in order to operate. We send manufacturing away from Europe. So now I'm not sure what we are producing here. We only have a few cases of big companies. In the technology sector, it's a common secret that if there is an idea and innovation, in order to attract capital, you need to go to the United States and open a company there in order to have the ability to present to funds there that could possibly invest in your company. Human capital. What we do, we keep sending our kids outside Europe. And I put now UK as well in this part. Everyone thinks that American universities are the best, and if you attend an American university, then you have the possibility to make something in your life. So I heard yesterday the Prime Minister saying that maybe we are at a time that we are over-regulating some things, and I fully agree with this opinion. My conclusion is that I think we know what the problems are. We don't have the capacity to talk among us. For example, the Capital Markets Union, we keep discussing for this for many years. And I think that the bigger states should take into consideration what the smaller states need in order to be aligned with this great idea. And finishing, I think that the politicians should, and the political scene should sit down, have a real conversation in Europe about what the future will be. Closing, for AI that you asked, I would say that AI has not helped people, in my opinion, gain access easier to capital, but AI has helped companies increase their value by servicing better, by giving better services in total. Thank you.
Thank you very much. Well, we'll come back and talk a bit more about that aspect. So back to you, ministers. So historically, Greece has lagged behind. I mean, I'm talking historically over, quite the long term, preceding the crisis years. It's lagged behind in terms of attracting private and foreign investment, and that's very clear when you look at the historical data for investment as a share of GDP. Now, at the moment, we see that GDP growth in Greece is being driven by fixed investment growth. I mean, first quarter it was, 12.1%, sure. So main driver. But that's one quarter we're talking about. But nevertheless, as a share of GDP in Q1 of 2026, fixed investment reached around 18% of GDP, which is a 16-year high for Greece, but actually, in comparison with other countries, it's still relatively low. And obviously, you need to keep that share of investment higher to achieve higher levels and over a longer period, because Greece has suffered this very big investment gap, loss, during the crisis year. So there's a big gap to make up. So. My question is, what has catalyzed that? How are you going to sustain it? And if you can respond to the point of Mr. Papakonstantinou about Greece really should be moving to, the next stage, not only in terms of attracting more foreign direct investment, which it's, it is doing now, but also in terms of creating bigger companies in Greece itself that can go out there and compete in the international markets as well, whether through mergers and acquisitions or
sure.
So just to hear your thoughts about that would be good.
Well, I mean, the numbers are very encouraging. You mentioned some of them. We're closing the gap. EU's investment is around 22% of GDP. We are reaching 18%. We have been as low as 12% or even closer to 10%. So most of the gap that we had with the EU is being closed, but we still have some way to go. As I said, we do offer some advantages. This is a very business-friendly environment. This is an economy that is producing. This is also an economy that has unique opportunities. There's a lot of investment. For example, Masdar invested in Terna Energy, not for Greece, but in order to create a hub, in order to invest in the wider region, and sort of that's why they're, I think they will rename it to Masdar Europe. So basically, Greece can be the entry point for Europe, for third countries, and also it can also offer unique opportunities to countries that want to invest in the immediate region, be it the Balkans or the Middle East. So increasingly, our economic diplomacy, we try to create those synergies with other countries. I mean, I went recently to Portugal, for example. We were discussing with the government how we can encourage partnerships between Portuguese and Greek companies. Portugal has a unique, can be an entry point to the Latin American side and field. We can help Portuguese companies to enter the Middle Eastern markets and so on and so forth. So we try to implement those kind of synergies, and we can to encourage those kind of cooperations through the traditional means of the economic diplomacy, those business missions, our tools, Enterprise Greece, ECG, Export Credit Greece, and so on and so forth, to create those opportunities. But at the same time, of course, we need to look into how to bridge a lot of those gaps. Productivity is the focus that we need to focus on, I believe. And the reason for this is also because I view that productivity can be a solution to a problem that we currently have. We have a lot of anti-immigration sentiment. The political landscape has shifted towards a very clear anti-immigration policy. And at the same time, companies in Greece and elsewhere are struggling with lack of personnel. For different reasons, China has identified this as a problem because they have the demographic problem. And their solution is robotics and productivity investment and a lot of investment in order to ensure that they close the gap between the people that they have and the jobs that they are opening. Of course, we need to look into those things, and that means that we as a government as well need to look at the tools, investment attracting tools or investment supporting tools that we have in order to ensure that these are shifted towards productivity gains. And finally, we need to ensure that the experience of companies operating in Greece is constantly being upgraded. The best marketing tool that we have is companies that invested in Greece, having a good experience and talking to their peers and explaining how important it is to invest in Greece and the difficulty or the ease of doing business here. So we will continue in this path as we transform our economy to attract more investment, but also to shift to the production of goods as well, not just services.
Thank you very much, Minister. So we've got 8.5 minutes, so that's good. We can everybody come back to a question. So, Mr. Nathalouka, you have quite an ambitious program over the next 12 to 18 months of divesting Ukraine state assets and attracting foreign investors. Key sectors, some of which you've mentioned already, aluminium, mining, fertilizers, retail, and so on. So I want to come back to this question of, how realistic is this ambitious program? And you said that you have, you can incentivize foreign investors to come, that you can mitigate risks and so on. So can you tell us a little bit about that, how you are encouraging investors to take the risk? And, are there examples already of early movers and people, who are taking the risk already in Ukraine, despite the war's continuation?
Thank you. Yes. I would not burden you with the list of foreign companies that have been investing in Ukraine starting from specifically 2022, because believe me, a lot of them, almost all of them. I will just tell you that we have done some very practical steps already, like allowing investors to keep their residency, meaning they don't have to open a Ukrainian company to invest in the privatization process. It could be a Greek company, it can be a Cypriot company, any kind of company. We allowed them, everyone actually, to pay in their currency, another step that we decided to do, to take to make everyone's lives easy. Then we allowed for the regulation to be not necessarily Ukrainian in terms of the court issues. So potentially you could choose the Stockholm Arbitration Court, you can choose common law whatsoever. However, my main takeaway from this conference, to be honest, is the idea of the 28th regime.
Yeah.
In my opinion, this is something incredibly interesting for countries like mine, but also for any other country that is seeking to attract investment. In the past couple of months, I've been talking to a lot of colleagues from Kazakhstan, Uzbekistan, but also from the UK. And UK is very dear to my heart. I studied there, I lived there. And the idea is to set up an exterritorial regime governed by common law, which provides trust to anyone who would like to invest. But my question is, if we are integrating ourselves into the EU, and since we're in the EU, perhaps the 28th regime as an investment regime makes a lot of sense. So perhaps Ukraine, even before becoming a member state, might implement, the company laws, the tax laws, the export-import regulation, that kind of framework that will make it much more trustworthy in the eyes of the European investors or global investors than it is right now. So this is my main takeaway.
Perfect. Thank you. So back to Ideal Holdings, I'd just like to hear a bit more about your investment philosophy, really, and how you choose the companies to back. I understand that you don't target specific sectors, but if you can tell us a bit more about your approach, and also maybe you can identify sectors that are showing particular dynamism or growth, or that identify ones, these industries of the future that will make it. Time is short, so yes, we've got to be a minute and a half maybe each.
Okay, no problem. Look, I'll tell you, I've been here investing in this market for 7 to 8 years, and through Ideal, we do that for the last 5 years, and we do it successfully. We had deployed around 400 million in this market, and we're the only Greek investor that has done it in that size. What matters and what we are very careful at, because as I said before, you cannot forecast geopolitical developments, and it's not our job. So our job is to adapt, and our job is to invest very carefully. So in a nutshell, what we do, we're very careful when we do selections. We don't look into sectors, but we look into companies, because for us, companies matter more than sectors, I would say. And by doing that, you do a rigorous due diligence, you evaluate different scenarios, but basically, you look into people, because this is the most important when you invest, because people are those that run the businesses. So you have to make clear that you have a good management team that delivers. The second, I would say, is the fundamentals. So you look in the fundamentals of the companies, and this is how you invest. And definitely, you look into healthy financials, because that's how you can protect yourself. I'll finish here, because...
Healthy finances, so that's a good segue to you and your industry. So, just tell us a little bit more in terms of your experience in recent years, in terms of, what's changed in your industry. You emphasize the importance of reliable information. So, just want to hear more about...
Well, as I said before, if we are to help the companies and finance institutions to reshape their future, in a sense that they will have the information needed in order to make financial decisions that they will help both the companies to be, borrow money and financial services to lend efficiently, we need information that will actually focus upon issues that they are quite important in these financial circumstances and the changing in the overall world environment, especially with the issues of geopolitical changes. What happens is that we see that whenever there is an issue of this kind, capital is increased. The cost of capital is increased. That makes investors quite skeptical as to whether they should invest or not. So in order to help them in making decisions that will actually facilitate further the development and the growth of the economy. We've seen great changes in the Greek economy the past few years. We've seen that the investors' trust has returned back to Greece. We've seen also great investment to take place, as we've seen with Ideal, that actually has invested quite a lot in the Greek economy, and many other companies that they do the same. What it is important is that in order to be able to make it a sustainable process and lead to growth, we need to discipline financial management. So we need to bring information which will help companies to manage their financials better, so that they provide data to investors which will be sufficient for them to decide. We need to invest in digital transformation. That will help companies, first of all, to manage their operations efficiently, and also to expand to new markets. The third thing is to invest in innovation. John said before that we're losing people, that great minds, great executives or professionals, that they go abroad, especially to the United States, because they find better solutions there in terms of actually practicing what they've learned and actually helping these companies there to progress. We can definitely help these people to return back by actually investing in innovation, in new products that will make us competitive, will help us actually to expand not only in Europe, but to the overall world market. And the final thing is to prevent the risk. If we don't prevent risk and we don't have measurements that will help us and it will help companies to measure the risk that they take, to forecast what the risk, that the decision they make, what risk this will carry on, we won't succeed, or we won't sustain this growth, which has a remarkable effect in the Greek economy, because we've seen how it has been progressed the past few years. We need this to become a sustainable system, a sustainable information process, which help investors, companies, and financial institutions.
Thanks. So, John, final word to you, really. Where earlier you identified, a lot of the problems, really, in terms of, that we're losing people, or Greece and Cyprus are losing people going to the US. That, in a way, is a kind of catch-22 situation, that we're falling behind in terms of innovation. We're losing more people. Actually, we've heard about people coming back. So, how do you solve this problem? What is in terms of encouraging entrepreneurship and innovation and keeping talent in the country?
So it's the reverse to what I've said before. This is a solution. And I'm aware that both Cyprus and Greece have developed programs in order to gain back the minds that have left the country. Cyprus has been a bit lucky in the recent past, because it has attracted many scientists and entrepreneurs from the region. Whenever there is a problem, an invasion in a country like the unfortunate invasion of Russia to Ukraine, many people from Ukraine, scientists and entrepreneurs, has made Cyprus their base. People from Russia, people from Lebanon, some people from Israel. So Cyprus is a bit different story on this sector. Why? These entrepreneurs that they came, they developed products and innovation that have attracted a lot of interest, and they have managed to create jobs. So these jobs have managed to attract back Cypriots that have left the country. Going back, I will say again that the only solution is to protect and develop innovation in our countries, Greece, Cyprus, and especially in Europe. Give more opportunities to those that they want to produce something, and find a solution as European citizens to act unanimously. That's it.